Talk a little bit about the marketing. That was a tremendous job you guys did with that.
Yeah, and actually, thanks. I mean, it was really funny because we didn't intend it to be the marketing thing it was.
Has it been successful? Just as a quick punchline?
Oh, my God, yeah.
Okay, you're free to talk about it now. I just wanted to know.
First, seconds, performing, non-performing? What the f***? Note buyers, when it seems like you're in this business alone, know Chase, Robert, and the rest of their tribe are at it every week. They're bringing updates from their own note businesses as they work to find, fund, and finish deals. Follow along as they share their grassroots education with you, tuition free. If you'd like to know more about what they do and to download the entire back catalog, check out NoteMBA.com. Now, flying solo as today's host, Chase Thompson.
Hey, everybody. Welcome to the Note MBA podcast, your home for note investing on iTunes. I am Chase Thompson, and I believe this is the third, possibly the fourth week in a row where I am not joined by Robert Woods. We've tried one strategy briefly, but it didn't really work out for the medium. Carrier pigeon audio podcasting didn't really pan out. So essentially, it is once again me this week. But again, I get to talk with an amazing investor. And this week, I get to chat with a guy that literally, we didn't enter the business together technically, but he was actually in one of the classes that I was in when I first kind of really dove into notes way back in, I believe it was 2014, which is not even technically my true introduction. But anyway, he's one of my favorite investors. He's been an active real estate investor for over 10 years. He initially started very similar to our interview last week, with buying and rehabbing and renting homes in Texas. But for the past 5 years, he's primarily concentrated on non-performing notes. All of this, though, and this is the part of the story I really want to touch base with him on, when he was getting started, especially that first 5 years, was while he was working an 80-plus hour job, 80-plus hours a week as a vice president of marketing for a global software company. Like, I would call this guy, and he'd be like, oh, bro, I can't talk. I'm headed to London. Or, oh, I can't talk. I'm headed to Vegas. Oh, I can't talk. I got to... He was unbelievably busy and still running his note business. But since December 2015, I believe December 2015, I could have that date wrong, he has been running this business. He replaced his full-time six-figure income as an investor, and I'm extremely excited to have you, Mr. Wayne Snell, on the show. Thank you so much for being here, bud.
Hey, Chase. Thanks, man. Wow, that's a really great intro. Humbling, but very true. Although December was when I really started the decision to get out of my full-time job. I pulled the trigger June. So I've been doing it now.
June. Even less time. Yeah. That is tremendous. We go way back. Like I said, one of my favorite investors. And I appreciate kind of everything that you bring to the table from an inspiration perspective. As a quick note, I would be remiss if I did not say anything. The third edition, the final, the trilogy to the Thompson family has been born. We have a lot of listeners that have already reached out on Facebook and some other places. I just want to let everybody know he is here. He is healthy. Mom and baby are doing great. And if I sound super energetic, it's because this is my first business interaction since the baby's been here. So I'm just like really pumped to be back in the saddle. So I'm glad that you, Wayne, are the first one up, me back in the saddle. Very exciting.
Yeah, and congratulations to you and Andrew. That's fantastic, dude.
Yeah. It's good times. It's a lot of fun. So let's dive in, Wayne. So your story is tremendous. It is it's the quintessential. I think we have a lot of listeners on the show that are like this, right? They have the full-time job. They see investing as an opportunity, not necessarily to escape the rat race, though a lot of people will have that opinion of it. What it really is, though, is it's taking ownership, right? It's that taking ownership of your life, the destiny, where your family's headed, where you're headed, all of those types of things. And you did it. You did it in what is essentially one of the most difficult places to do it, right? 80-plus hours a week. Not even different continents, different countries, different states, different cities. And you did it at like between 1 a.m. in the morning and 4 a.m. in the morning and all these things. Can you give the listener, I know a ton about it, just kind of a brief underview of what this looks like? What did your life look like for that time period?
Well, as a whirlwind, I'll tell you that. It's actually really funny. As I look back, I don't know how I did it. I will tell you that because I was full-time VP of marketing for a software company based in Dallas. I had a team of 20-something people reporting to me around the world. I was in London, every couple of weeks it seemed. And then we had conferences, events. So that job was a true job. I mean, a drag on your soul, so to speak. But it wasn't 9 to 5. It was 6 a.m. to 8 p.m.
And
easily every day.
That's what I was going to say. That part of it, to me, is one of the most important key features here. When I was getting started, I was working a job, but I had essentially a lot more free time. The position I had was a little bit more, I want to say, sales-y in that way. You were in a spot where it was like a legit 6 to 6, 6 to 7, or on a plane, you really had a true 12, 14 hour a day kind of situation.
Yeah. And I was part of the senior leadership, so I couldn't shirk responsibility, but I knew that I didn't want to stay with that. I had been doing that I've been in the software industry for almost 30 years, and then I've been doing the VP marketing gig at a couple different companies now. It's been well over 10. And every time it's just, it starts eating at you. One of the best things about the job as a VP of marketing is you actually, if you do your job right, you sell the company. Right? The company to be acquired, and then they don't need you anymore. And so I did my job really well.
There's goodness to that forced opulence, just that getting
absolutely.
yourself out, right?
Yeah. I mean, it was a nice payout in many instances. I'm not in any way complaining about it. What was interesting though is just you kind of, after a while I was just getting tired, and I kept saying to myself, "There's got to be I'm missing some of my son's football games, and watching him grow up from a plane sucked." So I was just like, you know what, I got to find a better way to do this. And I at the time I was married. We had this plan to acquire wealth through real estate. And as you mentioned, we did it. We started with the good old buy a dilapidated house, rehab it, put a renter in, cash flow it. And that was great until the market dried up. And we couldn't find any decent value homes. And I actually had a really just great mentor mention, you know what, you should be looking at notes because you can get ahead of the wholesalers. And I remember thinking at the time, I don't even know what the hell a note is. Okay, I have a mortgage. Great. How do you do that? But, and this was way before you and I met. I mean, I've been looking at them for a number of years. I was slow to move because of the job. But when I finally realized, you know what, I'm not getting anywhere. I get a great paycheck, but the day that paycheck turns off, I have nothing except some money in the bank potentially. That's when I realized I got to do something to better my life, and I wanted to be on my terms, not on somebody else's.
And how, right? Like when we were talking, you basically said, I don't know how I did it. I don't know what was, keeping me going. I don't know how I didn't have a heart attack. Was it just the vision of where you could be that kind of kept driving that ball forward?
Well, I think you're right. The vision was the motivation, but really it was just the sucking it up and doing the work. So, for example, I hear a lot of people complain, "Oh my God, I got a full-time job. I don't have the time to do, break down the tape, to put in my offers, to do the due diligence, to work out alone." I'm like, bullshit. Sorry. I was in freaking London at 3 a.m, and instead of drinking in a pub when I'm traveling, I'm working on my note business because you know what? I was like, the vision is I got to get out of what I'm doing. And you know what? You can find the time to make it work if you really want to. And that's the thing for me. I had finally decided I'm not going to let anyone else control my life. It's up to me. And you can either make it or break it. So that's what I did. And when you look at some of the things about the note business, sure, you need to get educated on how to do it the right way. But the rest of it is just sitting down and doing it, anything else.
You have to do the work. Now, to use this phrase one more time in this call, I don't know, I might use it again. We'll see. I would be remiss to gloss over a really important and key factor that really helped assist your escalation, right, in getting out, which was finding a really great partner. It's not even on my list of things to really talk about that we went over before the call. But as you're continuing kind of talking about making this work, Natalie's just great, right? Like, you brought somebody in that got the vision. She herself was in a situation where she also was kind of had to make it happen, right? But you really found somebody who got it, who got what was the vision, who got what was needed to get done. And that's another key part. I mean, again, time and again, we have these interviews that come on the show from investors like yourself. Last week we talked to Bob Malecki, and he talked about the two guys. He said, we're a three-legged stool. We've got this under control. We've got a lot of stability there. For you, finding that partnership and really getting that ramped up, I'm assuming was a huge key part of this.
Yeah, I mean, so what? So first of all, yeah, great. Thank you for shouting out to Natalie, because I was going to do that anyway. Natalie,
no, I would never suspect you wouldn't. I just was like, I'll get the brownie points. I'll go first.
So I guess the audience ought to hear that I did this on my own for 4 years. I'm using virtual assistants when appropriate. You build the right team and all that, but to really scale my business, I had found Natalie. We started working together. She, in a very similar situation, has a family. Had a better vision for her and her family. And the thing that is so amazing about Natalie for my business is the pieces of the business that I am weaker at. She excels at. So we kind of complement her. We go with the yin and yang approach, right? So she's my yin and yang, because while I'm pretty good at due diligence, that woman is amazing at due diligence and will not leave any rock unturned until she knows exactly what the situation is with the borrowers. And when we make a bid on a pool of notes, I can be sure that we're going to be within 2 or 3% of margin of error with the end game. I mean, our ROIs are spot on. When we actually predict if we're investing, if somebody invests with us, we can tell them within a pretty accurate level exactly what we expect them to earn when it's all said and done. And that's fantastic.
And that Venn diagramming is really important, right? Like that Venn diagram of like when you get that partnership, we got strengths here, we've got strengths here, we meet in the middle here, so we have really great communication, but not overlapping too much of your strengths. I mean, that's so important.
Well, that's a great point in general. Something I had learned a long time ago in the business world, the software world, was your comfort is to hire somebody like you, but your best to get the best person, you have to actually hire your opposite, so to speak, in terms of every strength that you have. You're looking for somebody that kind of puts you uncomfortable, and I don't mean Natalie does that, because we get along fantastic. But I'm kind of the public face. She's the behind the scenes. She doesn't feel comfortable out in big crowds. I revel in that. I love numbers, but I got to tell you, it's not exactly something I think about all night, where she will.
No, I definitely get it. I get that uncomfortableness, right? Like they make you uncomfortable in their strengths. You're like, man, absolutely. she kills it here, and I'm over here like, no, I get it completely.
Yeah, it's been great, and really has helped us accelerate. So she joined my business about a year ago. Well, a little more than a year ago now, and we have just taken off. I mean, we've almost tripled the notes that we've purchased since she joined the company.
I was going to say, as part of the what you sent over from a bio perspective, since December of last year, your company, Platinum Ventures, has acquired over 75 additional notes.
Yeah.
And scoreboard.
And it's really cool. And we're not done. I mean, obviously, from my perspective,
by no means.
As you know, Chase, we're part of a mastermind, Notes Mastermind. And in December of last year, we sat down and we were all doing our SWOT analysis and kind of painting a vision for 2016 back. And it's really great to look in the rearview mirror, right? Where we were saying, okay, so what could we do? And we were, obviously, Scott Carson is our mentor. he's like, so guys, I'd like you to tell me, where do you want to be a year from now? And we were all kind of like, all right, maybe we should do, I don't know, 20, 30 notes. And we were like, well, wait a minute, we did that much, in 2 years, and we're now full-time, or we're going to be full-time. Hell no. So, I mean, we fully expect to add over another 100 notes this year.
That's so
the way it's going.
That's fantastic. I love it. And to segue a little on adding notes, as we're talking about these additionals, one of the things that you and I both really wanted to jam on was an area of the business that you're really kind of tackling with a ton of vigor, right? Like a ton of excitement. And that would be contract for deeds. A lot of people see these CFDs is kind of how you'll see it abbreviated. Can you talk a little bit, just real baseline, what is, for those that don't know, a contract for deed? What is it that you're doing differently, say, than maybe some other people? How is it that you're attacking this portion of the notes business?
Sure. And just for the audience, contract for deeds, sometimes referred to as land contracts, and a lot of people think of them as owner finance agreements. They're a specialized version of owner finance. So let me explain them real quick. What a contract for deed is you sell a home to an individual, generally they're lower value properties, who may or may not have the right amount of credit to get a regular loan. In fact, they almost never do, quite frankly. But you do your vetting to find out if they are a good owner or buyer. And rather than
what's that vetting process look like?
Well, we use a team of attorneys, so they do check credit, although honestly the credit's usually not the biggest thing. We're looking for things like, have they been renting? And if they've been renting, have they been paying on time?
Gotcha.
What kind of assets do they have? How much debt do they have? We still want to comply with the debt to income ratios because our goal is eventually to sell these things.
Sure.
But so a contract for deed is we sell the house, we create an owner finance contract with one caveat. The caveat is we own the deed still. We hold the actual property in our company name. And the reason for that, well, there's twofold. One is, these people are a little bit higher risk. Although you do everything you can to mitigate that risk, the possibility of them defaulting is a little bit higher than with, say, a traditional mortgage buyer. And because of that, and the fact that they're lower value, you want to make sure that you have the easiest way to remove them from the property if they go delinquent. And that's what's really cool about contract for deeds is, and I'm saying this generally because there are obviously wide swings depending upon the state you're working in.
Check the fine print of the owner's manual for your state.
Right? But what 9 out of 10 dentists would say. But the interesting thing is that you can evict them rather than foreclose. So pretty much you send them a notice of demand. The contract is written. It says, hey, the day you don't pay me, you become a tenant instead of a buyer. And the day you haven't paid your rent, I can evict you within 30 days. So
do you have a conversation with them about that?
Absolutely.
You don't just let that sit in the contract. I mean, you go, hey, look, by the way, this is another aspect of this type of deal. This is how this is going to work.
Yeah, and most people get it. I mean, they know that their credit isn't very good to begin with. They're used to being renters. They actually, when I say they get it, they act like they get it. Now we always go through a closing company, and we always use an attorney when we do this. So there's not only Wayne telling them this, there's a closing agent and a attorney also reminding them. So there's 3 different people, if you use the 3-legged stool approach, to protect ourselves. Sure. But we think most people seem to be cool with it because they're like, you're giving me a chance I never got before, or you're giving me, you're helping me out of a bind. We don't accept somebody who calls up and says, hey, I want to move in your house tomorrow. Because obviously they're not the right, they're probably running like hell from their whatever last venture. But somebody who calls me up, a great example is we're working on one in Orangeburg, South Carolina right now. And we've had we've had about 50 people call because we put a bandit sign out. But of the 50, it got overwhelmed.
Real quick. What good was that? Like why a bandit sign? Does that provide additional marketing later on down the road, or was there some behind the scenes initiative for that reason?
Yes. So in this particular situation, Orangeburg is a little more rural than we generally buy.
Oh, I see. Okay.
And because of that, we weren't finding the right caliber of realtor to help us sell the property. So we, and those of you who follow me on Facebook will know this, we went to the house as part of a roadshow we were doing 2 weeks ago. And during that process, we're like, well, okay, so we might as well throw a sign up because we're here. And we were driving away and we got our first phone call. We've gotten so many phone calls. So bandit signs work. They're actually, it's kind of like crap. Now I've gotten so many calls that I need to have somebody go take it down for me.
Wayne, just come on.
Right?
Just complaining about the business.
But the point is, we're going to sell this property as a contract for deed. And you would be amazed at some of the people who call. And when you start talking, I'm fielding the calls myself because I have it go to our business line. And I've talked to probably 3 or 4 out of I haven't called everybody back, but about 40 of the people who are just amazing individuals. And I would love to give any one of them the house. So I had one person, for instance, call me up, and this particular house has a roof issue. And so we're priced it accordingly. Hey, you need a new roof. We're not fixing the roof. We've priced it so you can do the roof work yourself. This individual's husband works on roofs, so it's like a match made in heaven, right? She calls us up and says, hey, it's raining. I know we're not really buying it yet, and I hope you pick us, but my husband said, hey, why don't we go throw a tarp up on the roof for him? And I'm like, you're kidding, right? So guess who's probably going to get the house, because you can see the pride of wanting ownership.
Totally.
That's
tremendous.
It is.
Are the returns similar? As a versus, say, what we would consider to be that first, that traditional kind of first, second lien note, the contract for deed situation, that exit strategy, that purchase straight out, what how is that working out from a returns perspective and a workout perspective?
So there's 2 pieces to answer that. The first is going with the riffing on where we were. We generally create a contract for deed solely if we've taken possession back of a property, which obviously isn't our number one goal in the first place. So if we end up foreclosing, for example, or somebody gives us a deed in lieu and it's a lower end property, then we'll create a contract for deed. The purpose for doing that is we want to essentially get cash flow out of the property for as short as 9 months or as long as a year to drive up our yield so that we can sell the contract for deed as a performing note to others in the market. And that's where our returns really come into play, particularly when we're working with a joint venture partner. We're always looking for a minimum of 24% return total, and that by doing this, we're usually seeing upwards of 30% yields for, and then we split the profits, kind of thing.
Sure.
Now, that there's a flip side to that, and that is the purchasing of contract for deeds, which is the thing we do a lot as well. We buy a lot of non-performing contract for deed agreements, and so for 2 reasons. One is we can buy a lot of them for about the same money as you can buy some of the bigger mortgage notes. So we may buy 2 or 3 contract for deeds for every 1 regular mortgage we buy, so to speak. So you can actually spread your risk across a number of different assets. But the other reason is there's a huge reperforming rate on contract for deeds for some reason.
Is that so? Speculation, is that due to you said that they tend to be slightly lower value? So is that a general 9-to-5 job as representation of what the expense of a mortgage, as it were, as we'll call it in this, a payment, as it were, and or these people really want to take advantage of a second chance, and or they know they'll get kicked out, or is it just kind of like this happy mix of all of that?
I think it's a mix of all the above. The interesting thing about contract for deeds, and this would be true of a regular mortgage too, although for whatever reason, when I don't understand what would make a person default on a contract for deed when, say, let's say it's a $45,000 house. The interest rates are higher, but their payments are probably $200 or $300 a month principal and interest, add in taxes and things, because they do pay that. They may be in for $500, $600 a month. Almost always the rents are higher. If they were to be evicted and they have to go out on the street and find a place to live, the rents are going to be a lot higher than that.
And I was going to say, I think that's the other side of it, right? Is that if the rent is even, let's say rent's $100 less, you still don't own that thing eventually. So you still get into this unbelievable payment scenario, and you own it eventually, right? I mean, that's correct. That's the big thing. I mean, right?
Oh yeah, and so that's why we like buying them, and it's really interesting. A lot of the big, there's huge pools of contract for deeds out there that are not performing, and not to get into names, but there's a couple companies that have purchased a ton of those things or created a ton of those things after Fannie Mae and Freddie Mac sold off the bottom of their junk, so to speak. And so there's, thousands and thousands of them. The thing is, if somebody gets into a hardship, let's say John Smith from Anytown, USA, loses his or her job, and now they get a new job, and they're, let's say, just 2 or 3 months behind. Well, a lot of these big companies, they were like, yeah, you got to pay me all of it back before I'll even talk to you.
So they pulled that dumb bank move.
Exactly. And it's kind of like, we get on the phone with these people, and I don't always do it myself because we actually have obviously a third-party team to help with this. But I get on the phone, and they'll be like, I have had my money sitting here in a pile waiting to send it to somebody, and nobody will take it. And thank God you called, because I really want to stay in my house. I like my house. It's funny. You look at these things as an investor, and you go, dear God, who would want to live there? But people do, because it's theirs. Right. And you know what? One man's trash is another man's treasure. So I don't judge people for where they live. One of the things Natalie and I did when we did our roadshow was 2 weeks.
I was going to say, I don't want to transition from contract for deeds necessarily, but talk a little bit about the roadshow. Talk a little bit about the marketing. That was a tremendous job you guys did with that.
Yeah, and actually, thanks. I mean, it was really funny because we didn't intend it to be the marketing thing it was.
Has it been successful? Just as a quick punchline?
Oh my God, yeah. I mean,
okay, you're free to talk about it now. I just wanted to know.
So I guess for the audience, we documented a trip. We went and visited a lot of our assets in the southern U.S. states. I don't even know how many states we hit at least 11 states in a week. We rented a car and drove. And I got to tell you, you have a great business partner when you can drive for 2,800 miles and still like each other, right? But we just had a blast. We went with the goal of meeting a few of our borrowers to thank them for their business and for doing the right thing and reperforming. We've had a few foreclosures that required us to start working on some rehabs. So we had intended to stop in a couple of the cities, meet some of our contractors that are rehabbing, because it's always great to have put a face to the name and really get that sense of vesting. And then finally, we bought a few assets that we hadn't done anything with yet. So we did some door knocking, and that was actually amazing. I have to tell you, I never thought I'd knock on a door and go, hi, I own your mortgage. Why aren't you paying? But it was amazing because you get to meet the people. You see why they're not necessarily these horrible people that just don't pay their mortgage, right? It's, they have lives, and in some instances it's, I always say that, good people have bad things happen to them sometimes, whether it be death of a spouse or medical issue, some, whatever it is, they've lost their job. We just were humbled by the response. And by the way, when you go visit your contractors, you get them to to jump through huge hoops to get the house ready for you, so that we can either sell it or as a contract for deed or rent it out or whatever it is. So that's what we did.
I love that, man. That's tremendous. You did video. You were on Facebook Live all the time. It was a really, really well done job. I know that you've now probably, especially coming on the show, not that we're a big deal, but you've probably started many, many trends from the roadshow thing to people like now looking obviously at contract for deed stuff. last thing I want to touch base with you on, and I know you've got a jet. You've got an incredibly busy schedule. One of the things that you've been incredibly successful about as of late, recently, and I say as of late, I mean pretty much the entirety of this year and into 2015 as well, is you've done a really great job of raising capital. And I know one of the bigger things for you, or at least I think, because this was, for me, it was the case, was a really important mental shift for you, right? Like getting in the right mindset to go, man, I really am doing amazing things. And bringing other people into the fold is not a good idea. It's a great idea, and it's great business, and it's great for them. You know what I mean? It's really getting on that track from a mental perspective. But can you talk a little bit about that? Like, what are some things you're doing? How did you get to that space?
Well, it's actually funny you say that, because one of the things that a lot of people, and myself included, start out in this business thinking is, wow, I got to do it myself. I got to spend my own money. I have to prove to the world I can make it successful. You don't know I'm standing up with my arms up in the air. Superman, I did it, right? And so, and I was that guy. I actually took some of our money and I bought some notes, and this is even before you and I met. And there's nothing wrong with doing that, all right? But it doesn't scale. Okay, unless you have $1 million, which I didn't, right? Even if you have $1 million, it really doesn't scale, because once you buy a note, it's like watching paint dry. Sometimes it takes, sometimes you can have it completely worked out in 3 weeks, and sometimes it takes 15, 16 months. And you know what? If you got, 100, 300, 500,000 of your own money into notes that take 15 months, there's an awful lot of waiting for nothing.
Totally.
And you're not scaling the business. So what the mental shift that you talked about, Chase, was I finally realized, crap, if I want to do this full time, I have got to figure out a way to start pouring, and I use the analogy, pouring water into the funnel every month so that I have stuff continuously working out. And some are going to happen in 2 months or 3 months. Some are going to take 6 months. Some are going to take 9 months. God forbid a couple take 2 years. I need to be able to have payouts consistently across that. And to do that, I had to get other people's money involved. And so that was a mental shift. But then the fear of, holy crap, how do I get somebody to convince that, I don't know. I mean, I'm not going to call dad and mom. I mean, I did, but it's not about getting your family involved, although that's a good place to start. It's about putting your name out in front of the audience. So here I live in Dallas. And there's a huge real estate network here. As I mentioned, I was a rehab / renter. So I went to all the RIAs, the Dallas-based real estate investment associations. I've joined them. I consistently attend them. And I will tell everybody, I'm a note investor. What does that mean to you? That means that I get better than average returns from my portfolio and my investors. And if you're looking, if you're used to seeing 3, 5, even 7 or 8%, which is unheard of, in your bank account or stock market, then I've got a better way, and it's safer because it's secured by real estate. Are you interested? And I started with those people because they're realtor people already. They understand real estate, so it's not a big leap. Although notes are a little bit hard to grasp. You don't touch a note versus a house. But where I found the best success has been is just private investor meetups who are not real estate based people. They don't know or care, really is a better word. They don't care what it is. Just know that I don't like getting 2% in my freaking savings account. So you're willing to give me 10%? Hell yeah. You're willing, wait, I can earn 25% on a joint venture with you? Well, I'd be an idiot not to do that, right? And so it was really a mental shift away from the fear to just talking about my successes. Now, thankfully, I had successes, but for the people who don't have successes, I mean, you know what? You talk about what you're doing to get successful, and you can show that pretty easily, right? So, our average return on investment for our notes is 28%. This is over the 50 or so that we've already finished up. Being able to show that track record, I have investors that we've finished a deal with telling their friends who are now calling me that I've never met. And that is a very cool thing. So that does start happening.
Word of mouth. Word of mouth word of mouth's a good thing.
Absolutely. Yeah.
Especially when it goes in your favor, right?
Oh, especially when it goes in my favor. We just had a deal. We just had an investor call up literally last week, call up and say, hey, my friend just finished a joint venture with you on Jacksonville property. I want in on those. And I'm like, well, I've got this. I want it. Don't let anybody else partner with you on that one. And wired me the money yesterday. I'm like, that was that. And I'll admit that's not normally how that easy that goes.
Get after it, Wayne. Get after it, bud. I love it.
But I was pretty pleased. And you know what? We're gonna do a really good job for her. And in the end, she'll tell two of her friends.
That's what I was gonna say. I mean, that's the big thing for us as well. You're gonna do a good job for her. You're doing amazing things for others. You've got the track record. And you're just getting after it. Like that's like you said in the beginning, because I like to bring things back full circle. You're doing the work, and you're doing it well, and you're doing it with an eye on taking care of the people that are working with you, and that's huge, and that's tremendous, and I love it.
Yeah, and just to add to that point, you know, a lot of people get into this business with I'm going to take a house away from them and I'm going to throw it into a rental and I'm going to build up a massive pile of real estate. You know, we took a different tact. I didn't mean to take the tact, but when we started realizing that there's a lot of people who are good people who've just had bad things happen to them, and I can get them reperforming, even if it means they're paying less than they used to pay, or than they weren't paying, I guess is a better way to say it. As long as we're making a little money and we can help a person or their family, I feel good about it. And so it's more of a pay it forward thing. And it seems to also resonate really well with a lot of the investors that we work with. So they're more willing to join with us because they're like, okay, we're not stealing people's houses. You know, I mean, there's that negative mentality. And quite frankly, some people do not belong in a house. And I've had people tell you, F you can't take my house away. You know, I'm never paying it. I hate banks. All right, yeah, for those people, we're going to make sure and politely remove them or teach them that, you do have to pay your bills.
Sure.
But for the people who want to work it out, I'm very willing to make it work for them because we profit in the end anyway.
I love it. I love it, man. As a longtime listener of the show and a longtime friend of mine in the business, I appreciate you so much for coming on the show. We will have links to your website, platinumventures.net. We'll have email address and all that stuff in the show notes for everyone that is listening. And I actually included in one of our emails, I believe a week or two ago, coming up in about 2.5 weeks is Note Camp, which is the virtual note investing conference. It's 4 days. It's tremendous. Wayne will be presenting at it. So if you want to catch Wayne talk a little bit more about himself, about his business, about what he's doing to succeed, you can catch his segment at Note Camp. And we'll have a link if you want to get signed up for Note Camp to be able to attend that as well in the show notes. Wayne, thank you so much for being a part of the show today, bud.
Bud, I really appreciate it. As always, you guys rock, and thanks for the time.
Thank you, everybody, for listening. As always, if this is your first time here, be sure to head over to iTunes, subscribe, give us a rating, give us a review. And remember, this week, tell 5 other people you know about the Note MBA podcast. Catch you guys later.